Hey guys, welcome back to the Happy Profits. Here is Stephen Buis, Fomonomo on Telegram, and from the Happy Profits, because I like helping people, basically the right place to learn how to place the right trade. So yes, we're doing the 25 laws of trading for the 25 days of Christmas, and we're on law number 9. And I did, it's the same day. I'm just changing some hoodies because it was a little chilly at the house. So we're just going to go on to Law 9, Candlesticks Don't Lie. So candlesticks charts basically provide a clear and visual representation of price action. The patterns that emerge from this chart reflection market sentiment and trader psychology. Understanding these patterns help traders gauge between buyers and sellers, providing insights to potential market reversals or continuation. I know I messed that up. Undoubtedly, candlestick patterns serve as an indispensable tool for everyday trader. So basically, we have the wick and the body, and all that. That's where the higher price range. Here's the top part with the wick and the bottom part of the wick. I usually use body parts of the candle for my breakouts because I'm used to watching wicks go over, so I don't, lose a little bit, but I see a clear line after a while. And basically what I'm doing is there are so many candlestick patterns that stem from these basics. And you just have to master a few. You can just master one, maybe two, and that fits your personality and your trading style. And with this practice, you can develop a very keen eye for understanding the story of the candlestick pattern. So what candlesticks galore? So that's the first thing I want to really talk about is basically there's a ton of patterns that can be overwhelming. You obviously should just pick one or two of those patterns and just see what interpretations can emerge from them. And it's not necessary you need to learn them and all that, just what they actually do or what they say. I'm getting very easier to break them down for myself, and they're basically just suggesting a strong trend, a sustainable trend, maybe a shorter trend, maybe a reversal trend, because that's what that pattern tells you. It just tells you the sentiment of the market if you learn how to read them. My favorite two are head and shoulders and inverted head and shoulders. I keep it down to almost 2. I do have a couple other ones that I like, and I like, head and shoulders. That just means the last run up that the buyers took was decent, but it wasn't incredible. And then the other side on there is just a little bit more, just showing you the exhaustion of the buyers compared to the sellers. And that's the shoulder on this side. And then you see the market sentiment follow shortly after that. I can see them in large patterns, small patterns, large cap, small cap. I would go over maybe 50 charts and see if you can find a couple. If you can't find them in history, it's going to be very, very hard to see them live. I've worked my butt off to see them live because eventually, once I saw some certain reactions to price points, then I go, that's all that pattern could be now. So I working on ascending wedges and some other stuff like that. But my main two are basically reversal patterns, which is inverted head and shoulders when I need to stop buying. And then when I need to start looking to buy, I'm looking at the inverted head and shoulders, which is hopefully telling me trend reversal on the other side, which is where I'm going to enter maybe at a lower price. So if you've never heard of those two things, that should be something you should master. Almost anything you hear that you do not know, you should try to go master it. I gave someone a job at a conference. I said, hey, you should be the master of MACD. Never heard from him again. He was goofy then. Hope he gets pissed off if he watches that. I'm all about pissing you off for you to go, look how much money I made. Cool. It took someone negative to show you the positive, because otherwise you weren't hurt enough with your money losses to do it for yourself. And basically the rationale behind technical analysis. A lot of the technical analysis is basically these chart patterns, little simple things like the 200 moving average, the 50 moving average, and you think it's a whole day. Well, that's if you're on a daily chart. But if you're on a 5-minute chart, that's 50 candles of 5 minutes backwards showing you the thing. It's actually there to help you make a choice of market sentiment. If you need faster market sentiment, then it has to be a lower time frame. I use a 1 minute primarily to trade off or enter stocks. If a stock is going really ballistic, I will go to a 15-second because I have to match the speed of the chart to get true sentiment. That's just what I came up with, and it works very well, so I'm keeping it, and that's just the way it works. But basically all those things is, you know, you just sit there and you go, if it tells me something to make a better choice, then why aren't I using it? Yes, they say indicators are lagging. Yes, they are lagging for a 5 minute. But on the 1 minute, they're pretty true. And if you don't like the speed, then just go back to 5, or maybe have a 1 minute time frame of the same stock, which is a good. Understanding support and resistance. Obviously, part of that is part of the candlestick pattern. You go see this, and mostly you'll see the shoulder here. If it pierces through resistance, the ceiling, and it goes up too much but quickly comes under this and bounces again once it tries one more time, that's the other shoulder. Those shoulders usually are resistance for me. It tried to break. People said it was too expensive, so they went back down, tried again, and then it goes down. So when a stock's coming down from the head, I go, I'm expecting a shoulder move. So I'm looking for the shoulder move. Because I trade every little section I can trade, because I don't want to sit there all day and trade it. And I trade it with decent size when I'm off screen. You will find out when you manage a webinar and you're doing larger trades, trust me, you're going to want to get in and out of that trade. You don't want to fumble in front of people. So you pick a shareable amount that you can trade with without any panic. And I will usually add another 0 to those 200 shares to 2,000 and 5,000 shares when I'm usually doing 200 and 500 on a camera, because you basically have to manage that. And there is sometimes, I'm sure you've been in a trade, where you have to say, hey, I need to go ahead and pull up my stop loss, or I need to wedge it in and take a minimal loss if you see the sentiment not really continuing in your direction. So understanding support and resistance, basically again, possibly more people will buy here and more people are going to sell there. That's a good way to look at it. And we had an instructor that told us to buy at resistance, and eventually we had to get it. I just had to stop listening because it was not working out for me properly. And then we're going to go ahead and talk about consolidation. You know, basically when a chart's going sideways and the candles are going sideways, you know, it basically forms a pattern that resembles a sideways or flat channel on a price chart. Well, it differs because it's not going up and it's not going down, but they tell you not to trade consolidation. And I told you probably in the last video, I traded. I don't care. If I know the move is still trying to pulse up, I will take all those pulses. So I know those pulses, and I don't trade them enough price to matter to you, but it matters to me because I'll do a 5,000 share 10-cent trade a couple times. And you probably go, well, that's stupid. I go, that's $500 stupid. So basically consolidation is when the stock is basically deciding where it's going to go. It's going to decide if it's going to continue up, or the consolidation is going to say basically it's going to go down. And sometimes it takes longer to break a long trend. It does go down because it's tried. It's tried and it's tried. And all those accumulation of stocks is not going to push it up, and it just dies off. And that's why you should short sometimes out of a consolidation just as well as taking up, but only when it proves itself going downward. So basically consider yourself two things. A detective. Here are the buyers. Here are the sellers. Here's the usual suspects. They alternate in role of the market manipulator, basically dictating the rises and the falls. Their actions leave behind a trail of candlestick patterns, your clues, to give you a hint of who's currently controlling the market direction. These patterns range from bull and bearish candles suggesting assertive moves by buyers or sellers, to suspicious formations like a doji signaling standoffs, basically an indecision candle. When a wick's high, they're almost equal, and then the body's very small, very big standoff. So that's not a good signal, because that's good because if you understand if it's going up and that's indecisive, then maybe it's going to go up. And then when you see a stock going down and it goes up and it goes down and goes back, that's also going to be continuation of bears because it's not that indecisive to change the trend. So that's a good thing, and hope if you don't understand that, I had to learn that by just working my butt off on learning it. So it basically just tells you candlesticks give you reliable clues. They reveal truths. They don't lie, but they are challenging to interpret. So if I were you, I would sit there and work on pattern recognition. That's what I did. I got made fun of by my mentor of pattern recognition. Oh, we have our pattern thing. And hey, I'm still the one standing. So get on that deal. And the biggest thing about that is, if you don't see the pattern, keep working to see the pattern. There are patterns. I even saw them on another person's webinar. I see it, I go boom, 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 boom. And then someone says, well, obviously you see it, it's already happened. I'm like, yeah, but I see it live because I've worked on it live. So, but remember, no tool is foolproof, and the market can be unpredictable on occasion. But filter out what works best for you on the majority of your trades. Listen to what the market as a whole is telling you at the moment. Not yesterday or the day before, but the moment, in the moment. Sometimes candlesticks whisper. Sometimes they yell. But they always tell traders the truth. Hey, y'all have a great one. Hope you enjoyed that law of day trading. And if not, learn more about candlesticks. Learn more about patterns. A pattern is just a complexity of simple candlesticks that are telling you the same thing. So y'all have a great day, have a great Christmas, and have a nice night. Thank you.